Good afternoon. It's July 17th, 2021, 8:47 p.m. It's kind of late. It's Saturday afternoon right here. And the market has been pretty bad, but basically I don't really find any trade ideas for next week. And so there well, there are trade ideas that I found when I was scanning. But the thing is, do I recommend any of the beginner traders to enter these trades? Not really. They it's not a good time to go in, right? The breath is bad. Uh, yeah, basically, it's a good time to just hold. A great trader knows when to sit on their hand, and you know that's that's why this video, instead of going over trade ideas, like I always do on weekends, I'm going to be reviewing a trade I did around the end of June. Now, this is a really popular stock, AMD. Everybody knows it, right? Now, I basically ever since last August from last year, it's gone into this range of just nothingness, right? It's been going flat. There really hasn't set up any low risk, high reward probability trades. But at around the end of the July, I mean end of the June, I found a good opportunity to get in this trade. Excuse me. Basically, if you guys can take a look at the stock, right? It's been going basically the volume weighted average has been going flat and then going start declining, especially around March to May area. And around June, the stock actually peep up above right here. It went from $70 to $81, and the stock basically the price hold it there really well, right? And instead of the price pulling back, let it be a fair move. The stock went into this thing called it started consolidating, so it started correcting through time instead of price, and then it pulled all the way back to the 20 and the 50-day moving average, right? We even had a quick shakeout, which was pretty good. But then I didn't buy it there. Why? Because after a quick shakeout, I like to see a stock maybe consolidate a little bit more, and you can see that the 50-day just started rising around here. So I wasn't a convinced buyer yet around here. So I missed this move completely, this candle, right? But if you were to ask me, without this whole hindsight to go back, would I still without this hindsight, if I look at the stock, would I buy it? I still wouldn't. I was looking at it. I promise you. I look at a lot of stocks over the weekend. I probably make the move to not trade the stock. Okay, I will do it one more time. So after this move, what is it that it made on June 17th, right? Went up what? How many percent is this? Went up 5%, right? It went up. It was good. I see the price is finally got above the. If you guys can see the black line, the 200-day moving. Oops, the 200-day moving average right here. We got above that, and then the 20-day and the 50-day was starting to inclining. Basically, it stopped declining, and the 20-day got above the 50-day. If you guys realize my style of trading, a lot of my trades, I do have the 20-day above the 50-day moving average. I like to trade stock that's on an uptrend. All right, I hope you guys are familiar with that. So the stock made a move up, and then it's possible that the stock just keeps on going higher. I'll completely just miss this trade, but instead it gave me a pullback, right? Which I thought, okay, that's good. If it gave me a pullback, that means it wants me to trade this because it will be, that's the type of trade I want to make, because it pulls back, give me basically stops that I can put in, and I basically got evolved at the high of this day. I think it was Friday. No, it was Thursday. So the high of Wednesday high, I got in on June 24th, which was a Thursday. I got above the high on Wednesday. So if I were to draw a vertical line, I hope you guys can see this. Basically on open, I got in the stock, right? I got in at 84.56, and I had my stop at the low of Wednesday, which was a really tight stop, 83.14. Now this is something that completely style based, okay? I give I used to day trade a lot, and I incorporated that into my swing trading. That's why a lot of the times when I hold a stock, I might get kicked in a day. I get kicked if it's a loser, like really fast. If it's a good stock, I might be holding it even up to a month, right? Now the stock gave me a good pullback below the 200-day moving average. Never got down to the 20 and 50, which I wouldn't want to trade it if it got back all the way down there, because that means the stock would have been basically 100% pullback to where it used to be consolidating. So the stock basically went up, pulled back a little bit. Actually used this area as become a potential support area, because buyers showed up around this area. We never pulled back 100%. So I got involved right there with 84.56 with my stop at 83.14. That's a $1.40. That's a $1.42 stop, which is really tight for an $80 stock, right? And how do you trade? How do you do that? You just have to buy a lot of shares. My style requires a pretty big account, and yes, and that's how I. Oh, actually, it's all relative. You know, it depends on how much money you risk. I risk a lot, and that's why I need to buy a lot of shares. So the stock basically got moving, right? The moment I got in, it got moving. It was good, and then immediately when it got moved, I moved my stop to break even on this day because I do want to see a stock pull back a little bit, but not too much, right? And it did just that. It put in an inside day the very next day. Now, what does the inside day mean? Inside day usually means that it's going to act like a trampoline, and it's going to just keep on. It will bounce off that. And then I was able to sold half of my shares at this level. Now, how do you determine when to sell and when to like basically take profit? This is a problem that a lot of beginner traders are facing. Like people study all the time, charts, technicals, even fundamentals, right? To find the perfect time to perfect entry into a stock, into a trade, but they have no idea what to, like if the stock goes in their favor and they're making money, they have no idea what to do. That's where you have to set up your rules on how to take profit. I never set a profit. I usually let the stock stop me out. But in this case, I do take some profit around this area because that's where the stock had sold off last time. If you look at it to the left, there's the path of least resistance. It's getting harder and harder, right? It's not really on the up. It's pretty much it's harder to get up, basically, is what I'm trying to say. But does it have the potential to just break that? It did. And yes, it has the potential because there's no such thing as resistance until the fact that it show you that it's a resistance, So all this is just, data is for you to look at. Are they absolute? They're not. Therefore, I take half of my shares at $89.25, right? And I basically $85 and $89.25. That's where I took half of my shares. And with the risk unit I have, basically, or my entry minus my stop, my risk unit, we're up three. I basically sold half at 3.2R, which is $4.64 per share in just how many days? 1, 2, 3, 4 in 4 days, right? And then I basically adjust my stop as we go. And then the stock ripped, right? Put my stop at the low of the day. I basically chill it out because I know the stock is getting more and more extended. As it move higher and higher, I move my stop slowly. I didn't put it at the low of that day because I wanted to give more room, right? The Qs and SPYs weren't showing any weakness at all, right? It was just going ham. And the stock kept on going, and then finally, I moved my stop to here, and I started to see that the stock isn't pushing higher. It isn't making explosive moves like that anymore. So I started tightening it up, right? And finally, on the very last day, on the July 7th, which is 10 days ago, I will stop out of the stock at a price of $93.28, and that is 6.1R for the other half of my share, and that is $8.77 per share, and for half of my order, basically. So in total, in the span of 9 days, it made 10.46%. I mean 8 days, right? If you average it down, where I sold half here, and I'm not the way I trade is that even if I were to get involved right here, right, the chance of me getting this entire position, I just eat the whole thing, is never. I never sell at the top. That's the thing with my strategy. That's a drawdown. Every strategy has some type of drawbacks, right? That's a drawback. I never get to eat the whole cake. Sometimes leave the strawberry, sprinkles, but I get most of it, right? So I got stopped out right there instead of at 95, which would be pretty nice because it's another $2 extra, which would be another R, right? But I missed that. And do I regret it? No. If you asked me to do it one more time, yes, I would, even without this hindsight. Well, actually, now it's a good thing, actually, I got out right there because immediately after that, the stock gapped down and Qs kind of just died, NASDAQ and everything kind of just fell over. So I pretty much got out at the top for this one, surprisingly enough. I usually never do, but there it is. So that's 10.46% in a span of 8 days of trading. right? I take it. 8 days, 10%, why not, right? And yeah, that's, you see, it's not easy to go over trade reviews. One trade review is 10 minutes, right? Okay, and thank you guys for watching. And if you guys do like these type of videos, I'll do more of these, right? And also, one thing I never really mentioned, because it's all I don't mention it, because when I trade I don't talk to myself like how I talk to you guys when I make videos, is volume. I do look at volume. Are they as significant as people think it is? They're not. They're just a good indicator to see if, you know, the buyers are actually legit and the pullbacks are legit. For example, we can see that the volume has been it's like diminishing relative to where it was over here. If you look at it at the bottom, this is where it consolidated. As the stock move up here, we see a volume spike, and as it pull down, the pull down volume is a lot lower than the upward volume, basically. And what does that tell me? That tells me that the stock is undergoing some simply profit taking. That's it. No real sellers really coming in. And I bought it right here. You know, the volume kicking later, as you guys can see. The volume, the big, you see the big volume coming all the way like on this day. And these days, right, the volume never really kicked in. It's just small volume that's going up. You know, don't rely too much on volume. Like if you all you look at is volume to trade, you'll be getting in this stock like right here. You'll be way too behind, right? Volume doesn't pay you money. The price does. Thank you guys for watching. Also, got a lot of questions lately on people asking me, because we're getting towards the later half of this year, right? People are asking me how much should they aim for? Like, is there a percentage that's good? Of course, yes. You know, now people are asking me, is it? There's funny things. Some guy in real life asked me, like, you know, what's your percentage per year? Like 10%, 20%. That's the concept people have in real life, because that's what makes sense. Okay, but you need to start throwing that away if you want to become a really good trader. Always shoot for triple-digit percentage returns at the end of the year. If you can't make it, aim for it every year. Once you make it, once you've done that once, you realize it's not as real as people say it is, right? I guarantee you might be. Now, it's another funny thing. The guy asked me, "Hey, Forte, if you're making like 300% every year, you're gonna have more money than Warren Buffett in 10 years." People nowadays are underestimating how much money that Warren Buffett has. If I were to give you $5 million, and then let's say you 30,000% $5 million in like 5 years, right? You have $1.6 billion. And guess what? Warren Buffett has 100 times of that money. It's completely different, you know. You have to understand that. Thank you guys for watching. Follow me on the twitter.com/ForteCharts in the description, and then check me out, you know. Ask me questions in my Discord if you want to. I don't make any money from YouTube. I don't do subscription plans. I don't really plan on doing that. Okay? And if what I do, what I say, what I review, the stock ideas I give out doesn't make any sense to you, simply don't take it. There are stuff that doesn't make sense to us, even sometimes if it does, because it's, you know, this is how I trade, right? You might say, oh, swing trading, you gotta give more rooms and stuff. I don't like to give more rooms for my stuff. I trade the way I trade because that's what fits my personality. Thank you guys for watching, and I'll see you guys next week, I guess. Yes.